So the United States is activating the National Guard. And so let's take a look at what's happening here and how this works. And so I'm sure everybody's seen the riot pictures in the US over the George Floyd protests that are happening in almost every city now this weekend. Um, things burning. There's been a couple of shootings, a couple of stabbings. Police are firing tear gas and rubber bullets. And now the governors of, I've seen 14 states, but the best list I could find was 12 states here. Um, so far, Colorado, California, Georgia, Kentucky, Minnesota, Missouri, Ohio, Tennessee, Texas, Utah, Washington, and Wisconsin have all activated their state National Guards in order to maintain order, assist police, stop violence. And yeah, so let's just look at the National Guard and explain what that is for anyone wondering. These are reserve troops, mostly of the U.S. Army, but it's the Army and the Air Force. So these are Army Air Force reserves. You can see here Army National Guard and Air National Guard. Um, and so these are U.S. military troops that have been activated domestically inside of the United States. And so this is a second wave of lockdowns in the US that's completely unrelated to the Rona virus. And let's go back and check out. Yeah, so the National Guard is generally activated by the governor of each state. And so the governor can call in the National Guard. Um, but in 2006, the 2007 National Defense Authorization Act here gave the president authority to mobilize National Guard units if he wants within the U.S. without governor's consent. But the governors have been calling in the National Guard in this case, and not the president. And the president also has the authority to deploy military troops from the bases, like the military police. So yeah, Trump could deploy National Guard himself in states that don't do it themselves, or deploy military police from the bases in states like that. And so this is, yeah, military, whatever you want to call it. I don't know if martial law is the right word, but this is going to be a military style lockdown, uh, unlike the sort of optional lockdown that we've had here so far in the U.S. And yeah, so the National Guard has been deployed for several months, and I've seen reports that they're moving military vehicles around the USA over the last couple of months. But they've just been, helping with the Rona situation, and not actually activated in a military sense. But now they're being activated, and then also um, there's the executive order from Trump against social media, which is supposed to increase freedom on social media. And then now today they're saying that social media is helping organize these, uh, the riots and stuff. So social media is in the spotlight here, and we're getting domestic military action in the USA. And so let's take a look at the stock market and see what's going on, because Friday we got some craziness. We're here around this moving average, and so this is a 120-day moving average, which is the moving average that I like to use because it gets more reactions than like the 200-day or the 50-week or something like that. And it lined up really cleanly here on this sort of megaphone pattern. And so last week you got wild swings here from edge to edge in an expanding kind of zone. And this is generally called a megaphone. And what you get with a megaphone usually is either you get three taps to the top like this, which would reject down in a bearish move, or you get a bullish swing out that will break out above the megaphone here. And we got neither of those. We got sort of a swing and a rejection, and so it's hard to say if that is a third top going down or not. And then we got kind of fighting action down by the bears down to this moving average again, and a super hard rejection to the bullish side right on close. This is all like within the last hour of close on Friday, and yeah, so that's a big bullish move, and that was before any of this news about the National Guard military lockdowns in the USA that are going to start now. And so, what is the stock market going to do? I don't know. Let's flip through let's flip through these guys and see what the momentum is looking like right now. So I mean that, yeah, that's a big push, that last candlestick to the upside. And so that's a bullish, obviously a big bullish reversal off of the moving average. So yeah, on the 4-hour chart here, you can see it's a V-shaped flip here. And so this downward bearish movement has just been knocked down. So the bears here, I mean, need to get more divergence from this line and need to get down onto the bear side here. And let's zoom in and see what this looks like across the closer charts. Yeah, so similar on the 3 hours. I mean, this is obviously a sharp reversal on a key resistance line in the bullish direction. And so it was getting close to bearish. And then on the hourlies, on the 1 hour candlesticks, it was already down into bear territory. And then this reversal has popped it back into a bull side move with big divergence. So that's trying to go up right now, it looks like, over the next couple days. And now we have this weekend and we have a big crazy event. And so who knows how that's going to affect the stock market. I mean, the whole world has been on lockdown for months, and the stock market's been going up the whole time. And America's been on lockdown, and now it's just crazy, and more serious lockdowns happening. Um, so yeah, everyone's worried about a second wave of lockdowns from the Rona, and we get a second wave of lockdowns from something else. And so this is a worldwide depression in the economic system, and the countries around the world are all in financial trouble right now, and America's in a really weird spot relative to the rest of the world, because this is a bunch of dollar debt shortages. People can't pay their debt. People can't get loans. Um, it's been a big monetary contraction so far, and the Fed's trying to fight against the contraction with all these programs. Um, but the USA is in a unique position where they print the dollars, and then they can open dollar swap lines to the countries they choose to open dollar swap lines to. And so it's a really complicated, sort of worldwide depression, where America prints the dollars, and the dollar is the dollar standard against all the other currencies in the world. And so it's really a depression of the other currencies against the dollar. And so, like, in the Great Depression, it was, the dollar against gold, and gold was the standard. And in this case, it's the other currencies around the world against the dollar, and the dollar is the standard. And so in the Great Depression, you can't print gold. So it's a really sound currency against the dollar, and it drove it into a big deflationary move in the Great Depression. But here we have the dollar, which can be printed. So there's a huge debate about inflation and deflation, and dollar being printed against other countries' currencies being printed. And just taking a look at the interest rates in other countries, let's go. Let's go to this guy. Yeah, looking at the interest rates in other countries, they've been going down. I mean, England just had their first negative interest rates this past week, and so it looks like a deflationary scenario right now still for the rest of the world, but America is really hard to pinpoint what's going on because America has the dollars, they print the dollars. And so the US economy and the US dollar is a really weird situation right now, and there's not really much to compare it to historically. Um, yeah, because the dollar is the standard. And so this is a put call ratio. I want to take a look at the put call and see if people are going long or short relative to the S&P. So this is the S&P put call ratio. Let's throw the S&P chart on here and see. All right, here's the put call ratio against the S&P. So you can see the general activity is down here. Um, I'll get back out to the moving average on this in a second, but you can see that the put amounts stay relatively small, occasionally get like a little blast, and when we got down near this big reversal point, the put ratio got super high and just went crazy. And so people were shorting the market like crazy down here. And then it has been kind of chilled out and kind of, a little bit high put ratio through this zone. And then you get a couple of big put moves here and here, and then a reversal, and then not so much here. And then this high area kind of flat where we went up some more, got some more puts. And this reversal here is not getting that many puts, but it's a little tiny push up here. So people are mostly long at this point in the stock market. And so, yeah, so let's take the S&P off of here and so I can see the moving average and see where we are. Wait, what? That moving average does not make any sense at all. All right, so I had to remove the whole moving average and set it up again. Overlaying the S&P made it go crazy. But here you can see the moving average. So when you're below here, most of the action is below this line and not that crazy. And then you get puts occasionally, kind of sporadically above the line. But this is the 120-day moving average. So we did have a move up to more puts coming into Friday here, but we're still on the bullish call side of the moving average. As far as the put to call ratio goes, people are mostly bullish at this point, and so that's an interesting thing to look at now that people are not doing puts. Um, well, yeah, I mean, we'll have to see. We'll have to see what this crazy weekend turns out to look like, and I'm really interested to see the opening on Monday if this affects the market or not. I'm trying to figure out. I mean, everyone has kind of the scenario that the Fed is pumping money into the markets, and really the only thing that I've heard that makes sense, because the way that the Fed was pumping money into the markets was providing liquidity to the companies, and the companies were doing stock buybacks at really high valuations, um, which is kind of crazy. But that liquidation that we had in February, the huge drop, the stock buyback stopped, and the government's telling companies not to do stock buybacks, but they're opening up liquidity to other countries, and the other countries are in a big depressionary scenario now. And so I heard Brent Johnson mention that investment accounts in other countries now may be looking to U.S. assets as safer than their own assets, and so there might be money coming in from the investments in other countries around the world. And that's really the only explanation I've heard as to where extra money may be coming from into the US equity market. Because I don't think the Fed is getting a bunch of money into the US equity market at this point. I mean, not anything close to what they were doing doing before the crash. Yeah, so this is the update on a nutty weekend in the US with crazy riots going on and deploying the military domestically in the U.S. And we'll see how Trump responds to this, and if the government steps in and starts deploying National Guard and troops above what the states are doing, because so far it's just the states calling in the National Guard. And so, yeah, man, yeah, but the stock market right now is in a bullish trend, just made a big bullish reversal into Friday. And so we'll have to see what what it looks like going into next week. So this is not investment advice, and then please like and check out the playlist and all that stuff. And happy trading.